Welcome to TradeNBI.com. This is John. This report is for the 28th of July, and nice little head fake there. We had the big pump in the pre-market and created a lot of positive extremes, which we talked about, and sure enough, they filled it right back in, and then post-market pushing back up. So they're just playing with the stops back and forth, getting out their revenge on anyone who's either late to a trade or trying to catch a momentum move and then just trading against it. From an NQ standpoint, a lot weaker and still hovering around that 76%. But when you keep looking at the short activity, it just seems to fade here. We have Magenta shooting back up, short interest in the weight MBI fading there, and the net result just moving sideways, but plenty of intraday action, which makes it kind of nice from a trade standpoint. Getting close to the potentials for green crossover back above on DOC, but still hasn't happened yet. So rejection here becomes critical because you've got a confluence of all the red and green mixed in with the shorts and the cyan. So should make for an interesting end of the week as the month end play goes. This one would be comical if we didn't refer to it all the time. That rush to treasuries to reduce yield with no indication the Fed's going to change its mind makes no sense. And sure enough, pushing right back to equivalently pretty close to where it should be technically. So again, it's fun to watch those plays take place and always reverts back. And a good indication that the bond market has not been able to force the Fed's hand in any way, shape, or form, which has not been the case in the past when literally they could just mock the Fed and what they were doing. But now that the normalization has been allowed with rising rates, I think the Fed is in a much stronger position, particularly when you saw the unemployment numbers, if you believe those, and also manufacturing setup. So from that standpoint, things are chugging along. So the equivalent of what some people refer to as a soft landing or just the status quo has been sufficient enough to keep things where they are, which is something we've talked about for a while, that they've been successful at doing that, and they're going to continue to do it and drain whatever excess liquidity they can while still reducing balance sheet. So from a Fed standpoint, it's working out. Oil, though, pushing back to the upside of it. And, if the Fed is partially interested in keeping inflation elevated but not ridiculous, they're doing a fine job as far as that goes. So it's working out. From a euro standpoint, yeah, even with the ECB raising rates and that, there's a realization coming that things in the European Union are not functioning very well, but they still have to try and keep the euro into a range that keeps things from falling apart. And you're at the bottom side of that range right now. When they get down towards that 106 or whatever, it starts to get to be worrisome because we talked about what happens, and we saw what happened at the end of last year when the euro went sub-dollar, when they lose the handle on it. And this is a reality because the reports from European banks about almost non-existent loan volume, and that uh, that's a canary in the coal mine. It lets you know where things are headed. Gold fading back slightly on the news. It's just been a back and forth. If oil, though, continues to maintain, there's no reason why there wouldn't be a sustained run back to the upside for gold. So it's just a matter of watching where that continues to build. And just little to no activity from a crypto standpoint. Again, we had the positive extremes. There's still the one additional one taking it down to 27. But for now, just floating across and still within modest buy configuration. So that should be enough to keep it from falling apart. And you get a likewise move from ETH. Just no real enthusiasm. And it's quite nice from that super buildup. And as things started to fade, a little short activity from there, and then it covered on the bottom of it, and we've got the bounce back that's taking place in the post market, and potentially that should move if it does the proper thing back up to that 50% range in the 45.94 range. We're right at the 80. If it's unable to do that, and we can already see beginning of a white spike there, and Potential cyan moving back above green could pose some issues, and any failure below that 50% you would look for move right back down to the zero. From an intraday standpoint, this is what it kind of looked like. We had a, well, I'm gonna slide back a little bit for the pre-market. This a little bit of waste. So you had that huge run up in the European session, and then as soon as pre-market went, popped up a little bit further. But once the actual market opened, we were straight down. They tried to make a run at it, and when that started to lose steam, it just snowballed, filled all that positive extreme from before right back in place. And then once you've done that, you have an opportunity to trade against all the short interests that are jumping into it and make them cover. That's what they did. So again, the party back and forth continues. Uh, Perfect mean reversion activity. I think that's been quite nice. Everything's pretty smooth from a orderly standpoint, and I think that's something that's worth noting. Um, sure, for your buy and hold guys, it's continued, move higher. It's just slowed down, but intraday we've had a lot of activity that's been very helpful and easy to follow through with. So that's the long and the short of it for now. As always, though, look for me in the Skype chat. Continue to have updates for you as relevant. Trade well.